Hello everyone, my name is Moji. You're watching a Bitcoin Bubble news channel. Bitcoin is a lot like oil in a lot of ways. It's kind of like an energy commodity. It's clear that many things are different. You can move Bitcoin around a lot more easily than you can move, say, millions of barrels of oil. But Bitcoin is still an energy product. We've also built a de facto monopoly on the ins and outs of the Bitcoin system by having dollars pay for more than 95% of all transactions, whether they're stable coins or just USD. But most of the time they are stable coins. Preston Pish, a podcaster, recently talked to Mark Goodwin about his book, The Bitcoin Dollar. Goodwin talked about ideas from his book and the effects of covert dollarization in the chat, among other things. Goodwin said that the Bitcoin dollar idea was like the petrodollar plan. In the 1970s, the US and Saudi Arabia set up a system where oil could only be bought and sold in US dollars. This made dollars valuable all over the world. In the same way, companies in the US that hold Bitcoin might also have to hold US dollars, since Bitcoin is mostly sold in pairs with US dollars. Because of this, the value of Bitcoin goes up because of a fake need for dollars. Bitcoin stock is different from goods like oil or gold because it doesn't change when demand changes. Because Bitcoin has a set supply, its value is mostly determined by how investors in the market feel, not by changes in production or extraction. Because there isn't a lot of it available and people trade on speculation, prices can change quickly. This shows how uncertain the market is and how people's ideas about its value are changing. What does a Bitcoin dollar mean? Make this as easy to understand as you can. Yes, of course. I feel like I've done this a lot of times now. It seems like the Bitcoin dollar a la petrodollar would be the best way to make the comparison. That makes it possibly the easiest analog. It's a lot like the petrodollar idea. So let's talk about the petrodollar, shall we? In the early 1970s, the US decided to move away from a gold-backed standard, which meant that you could actually take your reserve notes to a bank and get gold back. This was a big surprise to Nixon. By law, they had to do that. Of course, you could argue, right? Gold backed up the dollar. When did that happen? It's debatable whether or not the market process broke down, but the Nixon shock happened in 1971. There is also a formal break between the US and the gold standard. We live in an interesting time when everyone thinks, okay, so this is the end of the dollar. There will be de-dollarization and all of these other things, and what actually happened was that the US military force really stepped up in Saudi Arabia and the Middle East. And we saw how the Saudi government set up this petrodollar system. In exchange for armed defense, they would only let dollars be used to pay for gasoline and oil deliveries, right before the Bitcoin relative production goes below the rate of the dollar and gold. We see something really strange happen in the oil markets, and that's when I'd say the petrodollar kind of died and the Bitcoin dollar system was born in that market. So it was clear that Bitcoin crashed too, going down to about $3,300. But it's basically 20 times within the next year, within the next 12 months. It seems pretty silly for a product. A lot of things are the same between oil and Bitcoin, more or less like an energy product. It's clear that many things are different. Though it's not as hard to move Bitcoin as it is to move millions of barrels of oil, it is still an energy product. The fact that more than 95% of Bitcoin payments are made in dollars gives us a de facto control over the ins and outs of the system, no matter if they're stable coins or just USD, mostly stable coins. At the moment, there is an acceptance, or at least an interest in accepting new capital requirements for the US system, such as Basel III. This would have a big effect on this kind of axiom, especially Bitcoin going up in value and needing dollars on the books. If your balance sheet shows that Bitcoin is a debt and not an asset, then you need to balance out the value of Bitcoin going up with dollars. This is called the capital requirement axiom, and it's meant to make you feel better about the fact that having Bitcoin comes with a lot of risk. If you want to play with Bitcoin, you should also have a lot of dollars on hand. Because of this, it makes this fake demand in this. Do you know that Bitcoin is a very unique thing? Because it changes with demand. And there is a set amount of Bitcoin released every 10 minutes, so it doesn't matter how much people want it. It doesn't matter how many people want it. That makes it kind of the first good to really prove that. Unlike oil, gold, or silver, these old energy standards don't apply if there's a big rise in demand for gold. Gold has 4 times the price it was before. If you send 3 more people down the mine, you'll get a lot more gold. When there is more on the market, demand goes down. Bitcoin is not interested in anything. To be clear, it's not at all about desire. As you may know, we've built a huge bubble of dollar-denominated debt. Right now, Bitcoin is kind of like a vacuum that can soak up all of this debt, this big bubble, and turn it into an asset whose value doesn't change much. In the United States, companies that hold a lot of Bitcoin would have to hold dollars. If we create rules that require these companies to hold dollars, Bitcoin will appreciate a lot, and these companies that hold Bitcoin would have to hold trillions of dollars. That's why I think this Bitcoin dollar play is so important. With a Zappo, which is kind of why we were looking at this piece. I really wrote about the Bitcoin dollar as a way to take a look at how it works. Okay, this is getting a little tricky. A lot of people don't really understand how interest rates or the financial system work. I wasn't one of them. I didn't really care about the book until I started to read it. Things we know are kind of hidden from us for a reason, so we can't be sure for sure. Yes, of course. So you look at his Apple and they built it. The two things you really need to make this Bitcoin dollar system work are, first and foremost, very high security. Let's say you want to hold these keys and make bits and bytes worth trillions and trillions of dollars, which is where we think this is going as Bitcoiners. Then you better be damn sure that you can keep those keys safe. And Zappos made that happen. They did some really stupid things. As I said, they put things in space, dug them into the ground, and even made fingerprint scanners that work like pulse readers so that you can't just cut off someone's hand and put it on the scanner to get their keys. It can tell if the hands are still there, right? For all of these reasons, it's really important to have very safe key management if you want to build a system that can hold trillions of dollars. Zappo did that, but it wasn't really what they were trying to do. It just came out of. Guys like Peter Thiel and Reid Hoffman bought Bitcoin from me because I thought it was a great idea. Then they chose to spend millions of dollars on it. After that, it grows by a huge amount. It's now worth a lot of money. And it kind of happened because his friends told him, hey, keep these things safe for me. That means you need to have very high protection. Also, you need to have this regulatory environment and this capital demand. And the Bitcoins must be in the United States. Clearly, that's an important part of this legal game. As everyone knows, Zappos sold its safekeeping service to Coinbase in 2019, which included Grayscale and a crazy amount of Bitcoin. I think that around 514,000 Bitcoin were sent from Gibraltar to the United States through the sale, bringing them back under US law. It was Grayscale who really liked 225,000 Bitcoin. At that time, it was about 2.7 billion. The deal was the biggest one in cryptocurrency at the time. All of these things bring it back to the US from being kept out of US regulation. So that's what really made the Bitcoin dollar system work. Obviously, they don't have a direct effect on law. And I believe safe coins are a big reason why people want to hold as treasuries. Very strong security measures are being put in place by Zappos, which I find hard to believe. We're here. So this Bitcoin dollar system started out as a thought I had in 2021 when I wrote about it for the first time. We've seen this basically rise to the point where it holds 5% of all traded Bitcoin. It's kind of built right into this Bitcoin dollar system. So yeah, the way this is coming together is very interesting. I believe that the